Hi, it's Lee, and welcome to the Tesla Economist. With so much fight against Tesla right now, I've had to fight it full time lately. When I'd rather be doing other things, I'm actually seeing previous bulls turning and selling due to what's happening. I guess they were likely new and hadn't been around the block as a Tesla investor yet, or never fully understood the mission. But now, some are even saying that Tesla's stock price is on its way all the way down to $120 to $140. For the record, that's the equivalent of $360 to $420 pre-split price. In other words, down to the price it was over 2 years ago. Despite everything Tesla has proven and achieved since then, is this a joke? Are you laughing at this absurdly low price estimate? Well, that's what we're here to find out. We've already gone through why people think Tesla's demand has reduced and why they think Tesla's market share is down. I've gone through all the data that's available, possibly to a higher level than anyone else, and definitely interpreted better than some YouTubers I've seen, and I see no evidence that Tesla is losing demand. But even if they actually were, they could drop their prices in China back to the previous prices they were earlier this year, and then they would still have enough demand and profit margins in excess of 30%. So this doesn't concern me. It's not as if Tesla's demand will simply turn off. I don't understand why so many people are struggling to understand very basic supply and demand. So what if Tesla make $2,000 less on perhaps 100,000 Model Ys a quarter? That's only about $200 million less in operating profit a quarter, even less in earnings after tax. Okay, so what? I can handle that, especially if we're going to be hitting perhaps $6.5 billion or so in earnings for Q4. If we did reduce prices in China, then that would take it down to still $6.3 billion in profit. That is still a lot of profit, and still a massive jump from any other previous quarter. Anyway, this is the kind of FUD we're dealing with. People are freaking out. What if Teslas aren't so popular anymore? We all thought that they were the revolutionary new vehicle, but the Chinese are making them for half the price. Literally what people are saying, which isn't even true. For starters, they're selling them for about 1/3 the price of a Tesla, but the Chinese are probably still making them for more than Tesla make their vehicles. Because yes, Tesla is that good. That's what we've been saying all this time. That's why we invested in Tesla. Oh, and Elon's that good too. Alright, let's just let the numbers do the talking. Well, in case you hadn't worked it out yet, a stock price between $120 and $140 is the same as saying a market valuation of between $376 billion and $439 billion. And Q4 should have earnings of around $6.5 billion, which if we annualize would be about $26 billion. Well, that comes to PE ratios of 15 to 17 relative to those Q4 earnings. Okay, and even if Tesla had a demand problem, of which it's not actually possibly the case, it would be more that there is just more supply getting closer to meeting their demand at their current price point. But Tesla is a growth company that is very early on, with plans to grow an auto business substantially from less than 1.5 million vehicles this year to 14 times as many around the end of the decade, with an energy business to accompany it too. Even if demand ever plateaued for the auto business, then there's always the energy business that has so much potential, as it is literally the ability to save people money. There's Berlin too, which is meant to ramp up from about 1,000 a week in Q3 all the way to 5,000 a week in Q1, and likely won't stop there. That's a lot of growth, and when you factor in all the economies of scale it brings too, then it's felt even more in earnings, and likely with the intention of getting that facility running at more like a run rate of 500,000 by the end of next year. Then my favourite opportunity that Tesla has, the 4680 cells, which admittedly is what we are waiting for in Texas. Again, another factory to hit volume production next year, except there's 2 production lines at this factory, so 2 potentially hit volume production. So when you factor in all this growth too, which is fairly medium term, sometime next year, and hopefully earlier than later, then we would end up seeing a PE ratio of around GM's if the stock price was actually as low as some people are saying. And might I remind you that this is a car company that really only sells one model. It made a model that became so popular, they've been doing everything they can to make as many as they can for the masses, and its popularity continues to rise. They also have another model, the Model 3. That too is very popular and has a lot of potential manufacturing upgrades it can benefit from in cost and speed. that could also be mass produced at a massive profit. Then there is the Cybertruck, which has more pre-orders than any other car in history. Then eventually they can make some sort of affordable EV if Tesla really needed some more demand. Even if Tesla got their prices down to $42,500 for a new EV, in the US that comes in at $35,000 after the tax credit. They can do that easily with the Model 3 rear-wheel drive they have now and still make great profits. Tesla could build a new factory or even add an old factory and retrofit it if they wanted to move faster and offer more Model 3 rear-wheel drives with LFP cells. Tesla have not hit a brick wall. The brand, product, technology is not short of opportunities. Yes, sure, you could say the economy will crash even more. We're in a recession, don't you get it? People don't want high-end luxury SUVs, as they say. Fine, but Tesla were making over 30% margin when they sold the Model Y for under $60,000. If they reverted back to their old price, then after the tax credit, we're down to about $52,000 or so. For a long-range Model Y, down from $66,000 today. People still buy cars in a recession, just not as many. If a Model Y dropped in price a massive 21%, then I'm pretty sure they can still sell all they make in a down market too. Likewise in China, Tesla was selling the Model Y rear-wheel drive for 301,000 yuan earlier this year and getting over 30% margin, then raised the price to 316,000 yuan, so they could drop the price again and still get a better margin than before, due to the line upgrades reducing costs. Tesla also likely paying less for cells since CATL's new factory built nearby. Not only that, Tesla used to sell the Model Y for 276,000 yuan last year. But the thing is, if Tesla dropped the price below 300,000 yuan, then the consumer gets an additional 11,000 yuan in subsidies. So Tesla only need to drop the price by 5%, but the consumer saves 9%, thus increasing demand perhaps as much as 30%. So perhaps in order to sell this much additional supply, Tesla do end up dropping prices if they have to. They may not even have to. This is just me merely entertaining the idea. We still don't know if it's necessary yet. Anyway, this means that the profit per vehicle drops 13%, but because they now sell so many more, profits end up increasing 45% with 66% additional supply. What is wrong with that? Even if they were able to sell just as many at the previous price, then the difference is only 13% in gross profit anyway, or $200 million. $200 million a quarter when we're soon going to be approaching about $10 billion a quarter early next year. That is 2%. So if the stock dropped 2%, if Tesla actually did have to drop prices, then that is much closer to efficient market hypothesis. Yet we've dropped 10%, just on the speculation of the drop. Yes, sure, there's a few other events happening right now, but that 10% we dropped was when the market actually went up 3.5% too. So it reacted even worse than what we're saying. If Tesla did drop their prices this low, then they'll be about the same profit as they make on their European sales. I'm going to say this again, as it's important to understand. Tesla are pushing out as many domestic Chinese sales as they can, because they make more profit than Europe due to tariffs and shipping. Then all the leftovers go to Europe, except that Tesla have to juggle their supply so that they ship to Europe at the start of the quarter, so they're not in transit and count as deliveries. Anyway, as you can tell, this is on my mind and I want to be thorough about it all, as I'm getting a lot of comments about it too, and people are concerned about it. Please comment though and let me know your thoughts or if I've missed anything else. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.